So I just want to make sure I fully understand the loss and who's on the hook for the loss. So the Bank of Canada has an obligation to pay in interest payments money to the large financial institutions that have accounts at the Bank of Canada. It's now paying more in interest than it's receiving from the Government of Canada for the rate of the bond itself. And what you've told the committee is that barring any legislative change, which is hypothetical, in real terms, that loss has to be covered basically by the taxpayer. Is that correct?
So we do need a solution, but what I'm telling you is that the bank will make losses for a period. It will go back to profitability. So provided we can use those profits in some way to
but today you can't, right?
To fill in the deficit. Yes, today we need a solution to allow us to do that. That is correct.
So under the existing framework of the bank, the solution for this operating loss is that Canadian taxpayers will be bailing out the Bank of Canada so that it can continue to pay those interest payments to large financial institutions here in Canada.
Well, we need a solution to this problem.
But barring the legislative change, that is what will happen.
Stop printing money for
Right?
Trudeau.
We have to deal with the terms that exist as they
I think what's
going to
happen is there'll be a solution to the problem.
Okay, so you're counting on that. You're counting on something that does not exist today.
That's correct.
Okay. You talked about the inflation being unrelated to monetary policy, but related more to a gap between supply and demand, that supply shrank while demand increased. Would you have to, would you be less dependent on interest rate hikes if the government pursued a pro-growth policy and increased the ability for Canadian companies and businesses to increase their supply? If supply went up, would the pressure on you to raise interest rates diminish?
Well, as I responded to a previous question, there's two elements to getting demand and supply in balance. There's supply and demand. So, I mean, demand is well above supply. The more supply comes up, the less demand will need to come down. I think, given that any actions taken on supply will take time, and given that the economy is clearly in excess demand, there is a need to slow demand. And from a monetary policy point of view, the tool we have affects demand, not supply. So, but yes, I think that, the more governments, parliamentarians take actions that augment the supply side of the economy, the more room there is for the economy to grow without inflation.
I just want to make sure I fully understand.
Well, we need a solution to this problem.
Who's on the hook for the loss? Canadian taxpayers will be bailing out the Bank of Canada so that it can continue